When you hear of tax clearance certificates, what comes to your mind? Question to everyone. When tax clearance certificate is mentioned, TCC for short, what do you think we are referring to? Is there anyone who wants to contribute? Elizabeth, would you like to say something about this?
I would say when we say tax clearance certificate, is the evidence of our remittances to the government.
Okay. So who are those people that actually, okay, let me put it in this way. Individual pay tax. Incorporated entity also pay tax. But tax agency responsibility is expected to be performed by business name and partnership businesses. What sort of tax clearance certificates do you think, if at all, that is given to a business name and a partnership? You want to say something? I didn't hear you. What's your view? Khadija, you want to say something?
No, sir.
Okay. So these are some of the things we'll be looking at today. It is not enough to say that because you have remitted the taxes on your own opinion, that it is adequate. Tax clearance certificate is expected or is approved to be issued to those who have been technically cleared of not having outstanding taxes. So individuals, as a taxpayer, you remember that we had said earlier in our previous classes that individuals that are into a paid employment pays what we call pay as you earn. But individuals that are managers of their own business or owners of their own business, or those who don't earn a monthly income, do also pay taxes on the income they earn. But on this note, what the form of tax they are obligated to pay is what we call the PIT. Whether you call it the PIT or you call it personal income tax or you call it pay as you earn, the approaches to calculating this is the same. The Enabling Act that compelled the taxation of this, the collection of these taxes on certain liable incomes is also the same. The third scenario is where you have individuals that are not employed on the terms and condition of the local local country or local state. There are some individuals that are employed in the capacity of an expatriate. When they so earn income from a defined primary state, they are also obligated to paying the taxes. The form of tax that these people are expected to pay, if the income is earned on a monthly basis, will also be regarded as PE. But if it is indefinite, we can now regard it as pay as you earn. So every individual who pay taxes, Adeni, please mute your mic. Every individual who pay taxes, irrespective of the states where they are responsible to, are obligated to be cleared of not having any tax outstanding. And as a result or as a confirmation of that, they will be given tax clearance certificates. Having been issued with a tax clearance certificate does not totally exempt the would-be beneficiary from being further investigated or being tax audited, right? That is not the issuance of the TCC, is not a total exemption from being subjected to further compliance or confirmation test that the said contribution is adequate. On the twin side of it, if we have to look at business entities, by that we are referring to the structures of various businesses, which could be sole proprietorship, others could be partnership, and the last one could be incorporated entities. I think I've emphasized this in some of our previous classes, that partnership and sole proprietorship business structure are not legitimately recognized business institutions in Nigeria. And as a result, this form of business structures are only allowed to operate as such because of the poverty nature of the world. It is hoped that they will be able to grow to becoming fully incorporated. Because these entities are not legitimately recognized in the law, even though they are allowed to register their names, they are not obligated to paying taxes as an institution. And because they are not liable to paying taxes, they are also not obligated to having TCC. So that being said, but that does not mean they would be totally exempted from performing their various tax obligations, agency responsibility, I mean to say, and that is in terms of deducting and remitting payee due on their employees, deducting and remitting PIT due on the director's income, deducting and remitting withholding tax on liable transactions, charging and remitting VAT on liable transactions, and performance of other tax agency responsibility with respect to CGT and other form of taxes. But as an institution or as a business entity, business name, or any entity which is recognized by the CAC in its capacity as a duly registered business name does not have any obligation on its own, but do discharge tax agency responsibilities. So what am I saying in a nutshell? Any institution that is being registered as a BN, business name, should not be issued with tax clearance. But those who are incorporated with the FIRS, with the CAC, of course, subject to their clearance by the relevant tax authority, they will or they should also be issued with a tax clearance certificate. So what then do we say about non-resident entities that earn income from Nigeria? Non-resident entities that earn income from Nigeria may have or may be issued with tax clearance certificates in Nigeria if they have a PE, that is a permanent establishment in Nigeria. But if they are those that just earn income remotely and suffered withholding tax, the withholding tax on their income will be deemed as the final tax, while they will not in any way be obligated to be issued with CTC. So we need to take this into consideration as we go through the topic. So in the course of our sessions today, we'll be looking at basic introduction to TCC, which I've laid before, definition of key terminologies that may be relevant to this subject, conditions for issuing tax clearance certificates, condition under which tax clearance certificate may be denied, content of the tax clearance certificate as the case may be, transaction requiring presenting tax clearance certificate. So a number of things of this nature relating to the above captions will be considered in the course of our discourse today. So leveraging on what I have said earlier, according to Section 85 of the Personal Income Tax Act, as amended in 2011 and even to date, it states that whenever the relevant tax authority is of the opinion that the tax assessed on the income of a person for the 3 years immediately preceding the current year of assessment has been fully paid, and that no tax is due on the income and that of, or that the person is not liable to tax for any of those 3 years, it shall be issued with a tax clearance certificate to the person within 2 weeks of demand for the certificate by that person, or given for a denier. So however, that the payment of the current tax shall not be made a condition for the issuance of the certificate unless the applicant is leaving the country finally. So that's this, what I've read now actually corroborates my earlier explanations. It is to say that it is not totally correct for any tax authority to say that because a particular taxpayer has not fully discharged all of its current year tax obligations, it should be denied TCC. It is not so, or it shouldn't be so, right? Provided the prior 3 years information, tax years, obligation has been discharged, and there is a ready-made commitment to actually settling the current year tax due, the tax clearance should be issued. But I've also emphasized that having been issued with a tax clearance does not totally exempt anyone or the bearer from further tax investigations or being tax audited. So what then is a tax clearance? A tax clearance certificate is a certificate given to a taxpayer by the relevant tax authority. So what we mean by the relevant tax authority here is, we have also established in our earlier class that as far as Nigeria is concerned, tax authority are only categorized into two major categories, two major categories. That is, those who collect the federally collectible taxes, that is the FIRS, and those who collect the state collectible taxes, that is the state IRS, State Internal Revenue Service, and the Federal Inland Revenue Service. So these two authorities are obligated to issuing tax clearance to any of its taxpayers who are reasonably within the subjects or provisions of this act are expected to be issued with a tax clearance certificate. So bear that in mind, that it is not only FIRS that issues its tax clearance certificates, but also the various states, right? So by the relevant tax authority, when the board feels that the taxpayer has paid the amount of tax due from all sources and no tax is due, it further helps in checking the rate of compliance at which taxpayers have been paying their taxes due. So what we are trying to say is, every institution that is a tax collecting body must ensure that there are full compliance or reasonable compliance with the relevant tax provisions. And where there are no full compliance or reasonable compliance, TCC may be denied. But our country has been solely integrated in such a manner that even if you try to circumvent the obligation, your tax obligations, by the time you have any statutory dealings with every other sector of the economy or the ministries within the state, within the country, one will then be turned or may likely be turned back upon non-presentation of the TCC. Say, for example, I bought a piece of land and I want to process a C of O. One of those is not LIRS that processes the C of O. But when you get to the ministries in charge of lands, there will, one of those requirements they will request of you is you must be able to present the TCC. So businesses have no option than to ensure that they do the needful in ensuring that they have these certificates. So my opinion to my fellow professional colleague here present is we must not just have a fair knowledge about tax clearance certificates, but what are those things that are precondition to you being eligible, or your clients being eligible, or your employer being eligible to collecting this TCC. And that still underscores or underlays the fact that financial reporting must be top-notch. It must be done in the manner that it ought to be done. That being said, tax obligations must be discharged within the statutory timelines when they ought to be discharged, right? Returns filing must be done within the statutory timeline when it is expected to be done. And if you look at it very well, you will observe that most of the topics we've had in the course of this very first semester centers on basic fundamental skill sets we need to have to be able to discharge all of these functions on behalf of our clients and that of our employer for those who are in paid employment. So conditions to be met before the issuance of TCC. Before tax clearance certificate is issued to any taxpayer, whether under the direct assessment or the pay-as-you-earn scheme, the following condition must be met. One, these conditions are what we refer to as checklist for issuance of tax clearance certificates to any deserving applicant. So we are looking at TCC within the context of what is issuable by the state tax authority. And what we will be discussing today from my own side, we address peculiarly how Lagos State Internal Revenue Services addresses or administers taxes for the issuance of TCC. I will expect my colleagues in every other state other than Lagos, the appropriate time I will ask you, how are these activities done in the states where you are resident? Is it materially different from what is obtainable in Lagos? So what are those things that are precondition? When we say direct assessment in Lagos, what we mean is those who are not in paid employment, but rather run the businesses of their own or have multiple streams of income are expected to do what we call self-assessment, right? So, but Lagos State within its context call these direct assessment. And I want to believe that most other states, at least the one I've interacted with, also use the same name for these categories of taxpayers. So for these categories of taxpayer, the following documents must be in the personal file of the applicant. We have what we call the tax form A, which is a self-assessment form, tax form. So in Lagos State, as a business owner or as an high net worth person, at the end of not later than March 30th of the following year, those who are not in paid employment or monthly or earning a monthly are expected to file in what we call the self-assessment returns. This is not different from the payee returns that is being filed not later than 30th of January, 31st of January, following the year the incomes and the taxes were paid, right? But just that this tax form A used in Lagos bears a lot of other information that ordinarily might not have been provided when we are doing that of the monthly tax returns, right? Then there should also be what we call the proof of service and that of the payment. The relevant tax authority must have served the taxpayer with a notice of what is due to be paid by the taxpayer after it has self-assessed itself. So in the self-assessment, the tax authority may not be satisfied with what income has been disclosed, what taxes has accrued, but may in its own judgment raise certain other topical issues. Raymond, please put your mic. So we have the proof of service and the payments. Then we have what we call the tax form 40 interview sheets. Lagos State has a peculiarity of trying to carry out a background check on most of its prominent direct assessment filers. So in this, they will do a number of checking to know your biodata, your financial background, streams of incomes that you could likely have, the bank statements and all of that. So those interview sheets must be also updated and put in your file. That is why it's difficult for anyone in Lagos State who has been identified as an high net worth person to circumvent the tax processes, right? They will have background information about the number of assets you have in terms of land, in terms of building, in terms of cars and all of that. Then income tax working sheet, that is a computation that they had made on their own. Then, having said that, we also have what we call the tax form L1, that is a notice of assessment, e-payment receipt, that is evidencing what has been assessed, which subsequently you have also paid. Evidence of, these days we have the e-payment receipt sufficing or overriding the bank.
Hello. Evening. How are you now?
Raymond, please mute your mic. You are distracting us.
Coming back soon.
Raymond, mute your mic.
Monday. Oh wait, is it our joy compact?
Raymond, we will remove you from this section if you don't mute your mic.
You see the sofa. Okay, you see my color. I don't know how to.
All right, so we have things like e-payment receipts, receipt of payment for the relevant taxes, application for tax clearance certificates, and tax form 34, that is 34 employee annual assessment file, and evidence of tax registration. So all of this information, you definitely might not see them, but they would have been updated in your file. So those are the basic conditions that are essential to be carried out if, as far as the direct assessment filers are concerned. So let's now look at the twin of it, that is the monthly income earners. How does these processes affect them? In the same vein, under the listed conditions of documents, the other listed condition of documents should be evident in the applicant's personal file and the control files of the establishment, that is the tax authority, right? A copy of the taxpayer's application for TCC, right? That's if you're doing it individually. If you're not doing it individually, proud to this very moment, what Lagos State do is to make a physical application for TCC. but they've upgraded their system a bit now. The moment you file the tax returns, Alpha Beta being the coordinating agency in charge of this, working corroboratively with the LRS, will automatically update your tax records. Taxpayers' establishment must have filed relevant returns for the 3 years preceding the, preceding years, for the 3 preceding years, as well as the current year of assessment. You will also agree with me that the TCC that we are referring to usually has 3 years tax information, right? So if I have the TCC valid for 2022, as we speak, the information, the tax record that will be there will be in respect of 2021, 2020, and 2019. Take note of that. So even though these taxes are expected to be paid on actual year basis, but the records that they bear are in a preceding year basis. There must be evidence of remittance of tax paid to the relevant tax authority. The tax from H2 bears the details of these 3 years information, which is expected to be updated on the TCC. Evidence of tax identification number. In Lagos State, if you don't have what we call the payer ID, you will definitely not be eligible to obtaining your TCC or ETCC card, as the case may be. Then we have what we call the detailed brief of the taxpayer. 2 passport photographs is expected to have been provided to the board as at the time you are registering or updating your tax records, right? One of these passport photographs is expected to be in your file, while the other one will be used as to scan your picture on your tax card and your ETCC certificate. The Act also made provision for certain conditions under which a tax clearance certificate can be denied. So paragraph 6 of section 55 provides that when a person who has deducted any tax pursuant of the provisions of this Act fails to pay the tax so deducted, whether payee or withholding, to the relevant tax authority, no tax clearance certificate may be issued to that person, even if he has fully discharged his own tax liability under this Act. So that's one of the reasons why, even under CETA, the FRS may deny certain taxpayer their TCC because other tax agency responsibility that they are saddled with has not been discharged as it ought to be, right? So this tax clearance is just a way to bring every responsible taxpayers to within the tax net. Content of the tax clearance certificate. But before we look at the content of the tax clearance certificate, I want to urge anyone who is not in Lagos State to please quickly narrate how these activities play out in their own state with respect to issuance of the state collectible, issuable taxes. Adeniyi, how do you process TCC in FCT? Is it there? Or who else is not resident in Lagos State to take us through how tax clearance certificate is being issued in your own state? Do you have things like tax identification number, which Lagos State calls the payer ID and the corporate ID? What are the things you need to do before this is issued? Are we there? Is Adeniyi there? Who else is not in Lagos who could take us through how it is being done in their own states of residence? Amolola, where are you resident?
Oyo State, sir.
Okay, good. So tell us, how does it play out in Oyo? Do you have things like taxpayer ID in your state? Are you there? Or, okay, maybe we should start this way. Have you ever processed TCC in Oyo State for yourself or for anybody?
On mute, can you on mute?
What do you say, Yomalala?
No, sir. Can you
Oh,
hear
you've
me?
never done. Yeah, I can hear you. You've never done that. Okay, I'm a bit familiar with the process in Oyo. Oyo will require you to make sure that you file your end of the year returns, that's your income and taxes remitted in the prior year, which is what we usually do in January. It will expect you to also submit what we call Form H2. Form H2 shows the details of your income in the last 3 years, the income you've made vis-a-vis the taxes you've paid. It will require you to also attach the evidence of the tax paid in each of those last 3 years. Additionally, it will expect you to make out a tax application form alongside with an expression of interest to obtaining the tax clearance certificate on an application letter. Each of the applicants are expected to fill a tax clearance application form, which will bear the details of the applicants as well as their autograph. So when you do all of that and you submit it to the tax authority, they will scrutinize it, check the adequacy of the taxes that you claim that you have paid, and the evidence of what you have also shared. And on the premise of that, if you are found cleared and eligible, they will issue. But if there is any alleged under deductions or under remittance of these taxes, the application may be rejected until when you then make the appropriate additional remittance. So for those who are residing in Oyo, who your employer has not been doing, or you require assistance in this regard, we can be of service to you. Amalola, where do you work? Is she still there?
I don't work, sir. I'm a student of University of Ibadan.
Oh, really, really? Okay, let me even ask this question. As a student, are you required to having tax clearance certificates, or are you obligated to paying tax as a student? This question
No,
is
sir.
to everybody. Are you sure?
No, I
And
don't think so.
except you have a business, maybe a sole proprietorship or something, or you are working somewhere, maybe you have to pay payee. I don't think you have to pay.
Okay, so the true position of things is that the moment you earn a taxable income, whether you are a student, even if you're a day-old baby, you're obligated to pay tax. But your allowance from your parents for your school fee or your upkeep does not constitute a taxable income. So if you run your business or you do some side hustles, legitimate hustles, I mean, and you earn income therein, you are expected to pay tax. So it may be wrong if the tax authority have also not been scrutinizing students to be sure that they are deducting and remitting the appropriate amounts due on their income. Because these days, a lot of students makes a lot of money, legitimate money, and they are not paying tax. So please don't live here with that perception that students are not expected to pay tax. Anybody is expected to pay tax who has earned legitimate taxable income. Please take note of that. But it is also good to clear it that your allowances, your upkeep is not a taxable income. But any income you earn outside that, I know a number of students who, while even still studying, they have a lot of virtual jobs they do, legitimate jobs they do, and they earn a lot of income. So they should be taxed. All right. Anybody who does not also reside in Lagos, who is working, who wants to share relevant information about this with us? Aditi, are you there? Do you want to share your experience in FCT?
I'm in Lagos, sir.
Oh, you mean you are resident in Lagos?
I reside
But you work where?
in Lagos.
You work in Lagos?
Yes, sir.
Oh, why have I been assuming that you've been resident in FCT?
Abuja.
Okay,
I have never mentioned it. All right,
what do you
sir.
say?
I've never mentioned it before.
No, I mean on my own side, I've always been assuming that you are resident in Abuja.
Okay. No, I reside in Lagos.
Okay, what about Timothy? Where are you resident? Olumide Timothy. Is it there? Okay, so does it mean we don't have anybody who has joined us today who is working outside Lagos? Okay, so let's go on then, since we don't have any other one. Okay, so that being said, condition under which tax clearance certificate application may be denied. The Act also made provisions for the condition under which a tax clearance certificate can be denied. Section 6 of that actually provides that when a person who has deducted any tax pursuant of the provisions of this Act fails to pay the taxes so deducted, and on the premise of that, the tax authority may deny the earlier application for the issuance of TCC. So what are the contents when you see a tax clearance certificate for an individual? What are the things you will see there, or you are expected to see in there? The outlook of this from state to state differs, but in Lagos State, of course, you will see the name of the beneficiary of that TCC. You will see the passport autograph of that person. You will see information about the incomes that the person has earned for the last 3 years. You will see information about the taxes that have been remitted or deducted on the income of that person, which must have been validated to have been remitted. You will see information about the the personal tax ID of the person. That is what we call the payer ID in Lagos. You will see the employer's name of that very person, and you will see the period during which that TCC is valid for, right? So like I said, other states may have a slightly different content, but above all in all, there are certain information that are common across board. You will see information about the income, you see the name of the TCC holder, you will see their address, you will see the taxes paid and information of that nature. So take note of that, and most importantly, it will bear the 3 years tax record. So transaction requiring or that warrants you to presenting TCC, what are those things? Is it just because we have deducted these taxes and we have paid after we have been issued with these taxes, TCC, is that the end of it? Of course, no. Activities in Nigeria has been so interwoven that even agencies that are not responsible for the issuance of this TCC are compelled to actually request for this TCC and not deals with people or entities who could not provide theirs. So one of those, some of those activities that requires the presentation of these TCCs are application for government loans for industry or business. So all of those government loans you've seen, the BOI loans, the CBN loans and the likes, before one of those salient documentation that must be provided before you can be eligible for these loans is what we call the TCC. Second one is the registration of motor vehicle. You bought a new car or even a second-hand one and you want to register it in your own name. One of those requirements will be the provisions of the tax clearance certificate. The application for firearms license. Should you want to, you felt you are an high net worth person and you should have a firearm yourself, licensed to you, one of those compliance tests that will be requested to be vet is the TCC. Application for foreign exchange or exchange control permissions to remit funds outside Nigeria. So should you want to repatriate funds outside the country for any business purpose or personal purpose, one of the requirements the bank will ask of you is the TCC. Application for certificate of occupancy. The C of O on your land, before you can apply successfully for this and it will be issued, one of those salient documentation required is also the TCC. An application for award of contracts, if you want to deal with any of the government agency in any capacity, you will also be requested or required to present in your TCC. Application for approval of building plans will also necessitate one. Application for trade license will necessitate one. Application for transfer of real properties will, you have a property that has been transferred to you or inherited by you and you want to register it or do a certificate of transfer in your own favor. One of those documentation will be required is TCC. Application for import and export license will also require one. Application for agent license and that of pool and gaming license, you will require one. Application for registration of as a contractor, be it on the platform of the BPP, you will require to present in your TCC. Application for distributorship, confirmation of appointments by government as chairman or any political offices position, you will also require to present your TCC. Stampings of guarantors form for a Nigerian passport, you will require TCC. Application for registration of a limited liability company or business name, you may be required depending on the sensitivity of the industry in which the company wants to operate, you may be required to present in TCC. So these are some of the few among the many reasons why TCC may be required. We've had instances whereby some of these states in Nigeria offers free education and to pupils or students, and they propose that before you can be cleared as a valid beneficiary of this free tuition fee, you should provide the TCC of your guardian or that of your parents or what have you. So these are conditions or situations warranting the presentation of TCC. Application for allocation of market stalls, electoral offices, expression of interest, change of ownership of vehicle by a vendor, application for plot of land, and any other thing that may be required from time to time. So this is what you need to know as far as the TCC of individual is concerned. But please, before we come into the question and answer segment, I will want to chip in, though I didn't put that on the slide, I want to chip in the applicability of TCC to an incorporated entity. I've said it earlier that for institutions registered as a business name, whether a sole proprietorship or a partnership, don't require TCC because they are not legally recognized within the points of the law, right? But as far as the law is concerned, incorporated entities, those entities that are actually incorporated, not the one that are just, whose name are just registered, are obligated to having TCC. whether you have commenced operation at all or you have not commenced operation, even if you register a business today, you can still obtain tax clearance certificate today. And one of the requirements would be you must be cleared that you are not having any tax obligation, whether directly or agency-wise. So, and it should be also stressed that entities that issue TCC to incorporated entities is not the state tax authority, but the federal tax authority. An entity that issues TCC to the individuals and not to the individuals is the state tax authority, but not the FIRS. Now, my question is this. If you own a business name, a sole proprietorship business, and you are required to presenting a tax clearance certificate, whose tax clearance certificate or which one will you present? Question to the House. You want to undertake any of those conditions we have earlier itemized that will warrant the presentation of TCC, and your structure of your business is that of a sole proprietorship or that of a partnership, whose TCC or which of the TCC will you present? Anybody with any idea? So which TCC will you present? Anyone? I'm listening. Oh, what's your view? Which of the TCC will you present? Nobody is talking. What is happening today? Are you at Owambe? Adeniyi, which TCC will you present? Grace wants to say something. Hello, what's happening? Adeniyi, I'm struggling to hearing you.
Come again, sir.
I said you own a business. It is called Adeniyi Akinwumi John and Co. You want to vie for a government job and they request you to presenting a TCC. Which TCC will you present?
I will present the State Internal Revenue TCC.
Why?
I'm an individual.
Exactly, that is the point.
I'm not a limited company.
That is the point I want to buttress.
All right, sir.
Exactly. So the point I want to buttress that is that partnership businesses or sole proprietorship businesses are not eligible for a TCC in their own name. Rather, it is the owners of those businesses that will present their individual tax clearance certificates. So that's what we want to discuss today, and that marks the end of this mentorship semester as far as taxation is concerned. Is somebody asking a question?
No, sorry, I thought I heard you call my name, but I was in a very loud place. But the question I wanted to ask, you've already answered it.
Okay, okay. All right, so that being said, by this time, by the regular time for classes, 6 o'clock next week. Okay, yeah.
I have a question, but not on TCC.
Yeah, you can ask.
Okay, like for VAT deductions, apart from the government parastatals and the oil and gas, which other organizations are allowed to withhold VAT? Is it remit VAT on behalf of the company?
Yes, Section 13 of the Value Added Tax Act provides all government parastatals, whether government parastatals, whether federal government parastatals, state governments, and even the local government. Then the second category of people that are obligated, or entities that are obligated, is that of the oil and gas institution. Anyone outside that is not obligated. Hold on, 1 minute, please. 1 minute. All right, so that's the question. I don't know whether that answers your question, Elizabeth.
Yes, sir. And the second one.
Okay. So any other question on what we have considered, whether today or in all the other previous topics as far as taxation is concerned, before we wrap up this this session?
Hello, sir.
Yeah.
Hello, sir. Sir, I pushed forward.
Yeah, very much with you.
I raised a question yesterday.
When?
In the platform, on the platform. A company that
what was the question again? I didn't.
Company who engages in mining and quarry.
Those that did what?
Mining and quarry and mining.
Okay.
What are the relevant taxes they have to pay? Are they exempted from VAT?
Those who are into the business of mining, Abi, and quarry.
Yes, sir.
Sorry, hold on 1 minute, a little distraction here. All right, so it is very simple to answer. You will agree with me that we don't just propose taxes to be collected. Those taxes that are currently collectible are actually as proposed or provided in the various tax laws. So the question is, do we have an explicit or a distinct tax law for entities in the mining and quarry industry? The answer is no, right? So they are still obligated under CETA. However, there could be some other state collectible levies and other dues that are to be payable in their location of businesses. That is not precedented majorly on the tax law. But in terms of the taxes that are collectible or payable by them, is majorly as provided in CETA. Is that clear, Adeni?
Yes, sir. Their services, is it vatable?
Their services in which context? Now, I know there are various levels and licenses given to the miners. Do you understand? So, concept of vatability is a function of the nomenclature and the substance of those transactions. And let's also look at it this way. The law that addresses VAT is very explicit, right? The law that addresses VAT is the Value Added Tax Act. So I want to draw your attention to the first schedule, part 1 and 2 of the VAT, whether it actually enumerates or outline anything as being relating to their form of business. And I think the answer is still straightforward. Let me read it out for you again for clarity's sake. Those items or line of business, line of services that are VAT exempt. One minute, please. So on the side of, are you there? I didn't hear you.
I'm with you.
On the side of the goods that are exempt is all medical and pharmaceutical products, basic food items. You will agree with me that the basic food item has been expanded in some of those finance acts. Books and educational materials, baby product, fertilizer, locally produced agricultural and veterinary medicine, farming machineries, and farming transportation equipment, right? Then all exports. If you are a miner and you export your mining produce, are you with me? The proceeds on that mining may not be vatable, not because there is an exclusive exemption for VAT on mine products, but because you are exporting it. And that is what I mean by, before you can actually give an expressive answers to that question, you have to look at the business model and the structure of the business process of those entities that you are looking at. A two mining entity, let me give you a typical example. There could be two mining companies, one that sells locally and the other one that exports. While the one that sells locally will be liable to VAT, the one that exports will be expressly exempt. You understand?
Yes, sir. I got your point.
Yeah. Any other question from any person?
Okay, sir. The last one is reduction of withholding tax. I understand that withholding tax could be 5% and 10%. Now, my question is there any specific, is it that the sole proprietors or the partnership?
I can't hear you very well.
And deduction of,
can you adjust yourself? There's a noise in the background.
hello?
Yeah, I can hear you now.
Yeah, I said deduction of withholding tax. Any specific rule?
Okay.
Let's say that the sole proprietor or the partnership is entitled to deduct 5%, while the companies are entitled to deduct 10%. So I just want to be clear on that.
It is not a straight jacketed 5 or 10%.
Okay.
Are you with me?
Yes, sir.
What informs whether you are charging 5% or 10% is a function of what is the transaction that give rise to that withholding tax.
Okay, sir.
Are you with me?
Yes,
so
sir.
say, for example, if you earn an interest income, whether you are an enterprise, you're a partnership, or even you are an incorporated entity, the withholding tax rate on interest income is 10%. If you earn a dividend income, whether you are an enterprise, you are individual, or you're a company, it is 10%. If you earn a rental income, whether you are enterprise or you are a business name or even an incorporated entity, it is 10%. If you earn a rent, a lease, or you hire some equipment, right? Well, irrespective of your business status, it is also 10%. So Other ones that varies is when you have management fees, right? Like the auditor's fee. Because auditors are more likely to be an enterprise than being an incorporated entity, the law has actually separated it that if it is a fee due to an incorporated entity, it is 10%. The one due to individual is 5%. If you earn commission, consultancy fee, technical fee, service fee, if it's an incorporated entity, it is 10%. If it is individual or enterprise, is 5%. Loyalty or anything of that sort, it is 10%. For incorporated entity is 5% for an individual. So, but the line of thought is you need to identify what is actually giving rise or give rise to that income that is liable to withholding taxes. Is that clear? That should be the line of thought before. There was a time that on construction contracts, particularly relating to civil or buildings, that is even as reduced to 2.5%. And you should also note that in some of those withholding tax liable transactions, particularly the ones that relate to international entity or non-resident entity that has a DTA with Nigeria, it can even be as reduced as 7.5%.
Okay.
So maybe if we'll be holding a training for our second semester for this particular mentorship, we'll bring up more of those international tax issues, topical issues in this context that actually may bridge the knowledge gap of some of us.
Okay.
Very nice, sir.
Yeah, good evening.
Please, I want to ask, as regard to recently, there is a new development in filing of audited financial statements, which is the police, I don't know if it is police trust fund or police that they are charging the company on during the period of filing. So I want to know more about it, please. Because I
About
don't
which
get the
one now?
basis of that. Eh?
About which one now?
Okay. Yeah, this one they call either police trust fund or police. I couldn't remember it clearly. But when you are filling the filing of audited financial statements or the tax promise, they used to bring this. I mean, during the computation, they compute it themselves. So I really want to know more about it.
Yeah, that is a new act that actually makes a special, that actually necessitates a special or additional tax on companies, right? And that is what we call the police trust fund levy. It's an additional type of tax, right? So that is why that came up, right? But if you are also been abreast of developments in the courts recently, some group of lawyers has actually challenged the legality of that tax or levy. As we speak in the court, the last judgment on this is that form of levy should actually be on hold until when there is an overriding judgment in court.
Okay.
But the calculation
But
is
yet,
also subject. You know, it's not immediately that the FIRS will change it, right? So it's not immediately that we effect those change, but the court, there is a judgment in court that actually puts an hold on it. But in the absence of that, the condition for the chargeability of that is whether the company actually has profits that is like, I mean, profit before tax that you are considering for tax purpose. If there is no profit in your accounts, wherever, you won't be liable to the police trust fund levy.
Sorry,
Any other
contrary to
question?
that, yeah, as regard to that, there is a company that is at loss, and yet they compute the police trust fund for them, though it's minimal anyway. But I was wondering why that could be. And also, whatever they want, the computation of that police trust fund, please. I don't know how they calculate. Can you hear me, sir?
Yeah, I can hear you.
Okay.
I want to show you something. Let me see if my system will come up. While that is coming up, the network is a bit slow here. The rate is, it is only applicable on any company that has net profit. So if you check your, what do you call it? If you check your audited accounts, do you have net profit there? If there is net profit there, 0.005% of that net profit is a police trust fund. So if there is not net profit there, there should not be any levy for that. So what could have made the system to calculate it is that maybe when you want to type in the net loss of the company, you didn't put negative there. Do you understand?
Yeah, okay.
Yeah. So you need to check very well. If you have typed in a positive figure as a net profit, the system will automatically estimate the police trust fund levy. But if it is a loss, you indicate loss by putting negative, then the system will not recognize police trust fund.
Thank you. Thank you.
Yeah.
Hello, sir.
Yeah, I'm with you.
In filing CIT return, a company that has withholding tax, we confirm on tax format, we see it under that withholding tax credit. Now, how do we apply it?
Sorry, take that again. Take that again.
The company has withholding tax, and we confirm that on tax format under withholding tax section, tax credit. How do we apply that in lieu of payments to offset CIT obligation?
Okay, so you know, there is a department in FIRS that they call them tax accounting, right? So if you have any tax credits, you will need to visit that department depending on which tax office your own client is, to ensure that you reconcile that withholding credit notes with their system, and they will be the one that will upload it. So without that reconciliation, you can't have it uploaded, and you may not be able to utilize the credit. You know, before now, what we do is to manually express our interest in actually utilizing these things. But because of the automation now, you have to reconcile with them. They will be the one that will upload the approved credits before you can then utilize it. Is that clear?
All right, sir. Yes, sir.
All right, any other question? What do you say?
Yes, I was just talking about that because I have one issue like that as well. That although during the course of filing, if you are having a withholding tax credit, I think it will ask if you want to use your withholding tax credit to offset the CIT. But aside that, but to bottom on what you said, that is if they have uploaded it. But my question, I still have one question as regard to that. At times we discover that this filing that we have done, maybe over the past when the tax promise is not in existence, many of them are not uploaded. And when you get it, they will tell you, okay, don't worry, we are working on it, that we will upload it because fine. To what they told me as of last week, I still have some issue with them, and they said they have to send it to Abuja for them to approve so that they can credit the ledger of that particular company. So, but I see a scenario that this kind of case happen, and yet some of the staff were ahead to generate TRN to make the payment of EDT, that penny the time they do the upload. But some of the staff, some of them will say no, that until they upload that withholding tax credit you have with them, that is before the existence of tax promise, that they will, until they upload, that you can't make use of it. So it is a lot that fine. That's the normal process that they should upload before generating their hand for you to go ahead with EDT payments. I want to ascertain that. Thank you.
You know, there was a publicity sometimes ago that everybody should go and reconcile their withholding tax credit so that they can get it uploaded. So the truth of the matter is, you cannot utilize it if the system has not actually recognized it for you. So as much as possible, if you are having difficulty reconciling the updates with them, you will need to find a way of reconciling with them, talk to them gently, or even try to manage the situation. They will get it done for you. Do you get my point?
Okay, sir. Yes, sir. Thank you.
Tax affairs is majorly 70% relationship management. Grace, why are you disturbing us? Tax is majorly more than 70% relationship management. So when you are having issue with some of these people, just speak with them and see a way of managing their shortcomings in getting what you want out from them.
Thank you.
Thank you too.
Hello, sir.
Yeah.
Like the case I referred to the other time, on the portal we have the withholding tax credit, even stating the company that paid the money, the value of the transaction, the withholding tax charge, date by date. That was 2021 withholding tax, not 2020. It was 2020.
On which portal now?
On the taxpayers portal.
On which portal now? Are you referring to the tax promise portal?
Tax promise portal, yes, sir.
Okay. Okay, you know what we do? What tax station are you dealing with?
That one is Ogun State portal, MSC water.
Okay, you know what you would do? Maybe on Monday, put a call through to me. I will link you up with one of my colleagues that handles that so that I can give you a clue on how to better manage it.
Oh, great. That's great. That's great. Thanks so much for that.
All right, thank you too. Any other issues that we have not addressed? All right, so if that is all, please, I will want to encourage you to get prepared for just a kind of refresher of what we have learned thus far. And just to also test the extent to which we can recall some of these issues. And that will be all for this semester. So hope to see you same time for this topic. For this course next week. Please log on early. The assessments will not be more than 35 minutes to 1 hour max. And whoever that did not attend at the very beginning may not be able to log on. We will share the codes for the app. It's a special app we're using or will be using for that test. The questions will be displayed on the app. Everybody get your phone ready or your system ready. You will connect most likely with your phone so that you can be able to select the options of the questions and answer the questions correctly. So I wish you all the very best. Enjoy the rest of the weekend and make KCP proud of what you have learned in the course of this semester, and do well to the accounting profession as a whole. I wish you the very best and see what you can do to making yourself very relevant to your employer and to your clients. Enjoy the rest of the evening.
Thank you, sir.
Thank you, sir.
Thank you too.
Thank you, sir.
Thank
God
you,
bless
sir.
Thank you too.
Thank you, sir.
I called in error when after I need to talk.
No, it's fine. We can talk now if you are ready.
Because okay, yeah, we can talk. Okay.
Okay, so I'm listening to your question. Yeah.
Yeah. So what you said was I was trying to read the write-up. So what you were saying is that all those impairments that you want to write them back to profit.
No, that is not what we are saying. You know, this particular concern we had in the last audits is majorly because of that impairment. We are now saying that you should also be aware that this very year, because we have not been able to rectify that concern, we are more likely to having that same challenge. However,